Okay, so today I'm going to tell you about a trick that professional Wall Street traders use to make a lot of money. So let's talk about it. All right, Charlie, I'm ready. Let's get going. This is the Hey Ed YouTube channel, and I am your host, moderator, and all-around nice guy, Edward Anderson. I'm not a financial advisor, so do not construe anything that I mention in any of my videos as financial advice. Always do your own research before doing anything with your money. And today, I'm going to spill the beans, a little trick that professional Wall Street traders use to make a lot of money. Now, I worked in Wall Street for a long time. I started in 1987. And I worked as a stockbroker, a trader, and as a trading instructor. And when I started teaching the general public how to trade, I started to reveal some of the secrets that I learned while working on Wall Street. Secrets to trading that professionals use to make a lot of money. Now, I feel a little bit like the magician who reveals the trick behind a magic trick. You're not supposed to do that. There's a code. Magicians don't reveal the trick. I mean, because I'm going to reveal one specific trick that traders use on Wall Street that other people don't know about. Now, by the time I'm done explaining this to you, you're going to say, well, gee, that's simple. That makes a lot of sense. Well, yeah, it does. And it is simple once you know what the trick is. All right. So for those of you who don't know, I designed one of the first trading classes that was available to the public in the country. And I did that right here in Minnesota after working on Wall Street for a long time. I moved back to Minnesota. I worked for a little while longer for a Wall Street firm. Then I went to work for a buddy of mine who had a trading floor. I designed a trading class. And I started to tell people, the inside scoop on how to be a successful trader. I refined the course more and more and more. And by the end of it, I was able to teach someone how to trade in 90 minutes, academically, right? And along the way, a lot of the little tips that I gave people came to be known as Edisms. Okay, yeah, my name's Ed, by the way. And one of the patterns I taught, by the way, was called the Anderson pattern. I didn't invent it. It just happens to be my favorite pattern to look because it has a high percentage winning rate. It's very easy to find. It's low risk. But in the process of trying to explain the ways some of these secrets work, I had to find ways to help people conceptualize what I was talking about. So I'd come up with little titles. So the title of this trick is The Theory of Relativity. Now I'm going to use the word stocks a lot because I used to be an equities trader. And, just for convenience sake, I'm going to use the term stocks, but this principle applies to whatever vehicle you're trading, whether it's cryptos, bonds, Forex, it doesn't matter. This theory applies across all asset classes that you're trading. So the definition of Ed Anderson's theory of relativity as it relates to trading is that whenever a stock does something other than what it should be doing, it makes that move even more significant than otherwise. So let me explain this. Stocks, or whatever it is you're trading, they have catalysts along the way that will propel them or make them sell off. Usually it's news related, right? But there's always an outside force that is influencing the move of the product that you're trading. So when you have a stock that has some kind of an influence that's supposed to be driving it, whether it's a news event or some kind of outside catalyst that's supposed to be moving it, but it doesn't, that's a little clue. Now, let me give you an example you can relate to. Let's say that you're in a stock and they have their quarterly earnings report out at the end of the market close. And by the way, if you're a professional trader, you can trade in the aftermarket for a few hours. But let's say they have their earnings report and they blew away the numbers, really good numbers, right? They not only they meet their estimates, they beat their estimates, and they even beat, the so-called whisper number. Spectacular. Well, that stock should go up on that news, right? That's good news. But instead, what happens? The stock doesn't go up on that news. Maybe it stays flat or maybe it even goes down. So that stock should not be going down, right? Not if you draw a straight line between, the really good news and the price action. It should be going up. So a professional trader is saying, okay, this is a bad sign. This is a negative sign. This is a bearish sign. So I'm gonna short this guy. So whereas the amateur retail investor is sitting there saying, what the hell is going on? Why isn't my stock going up? It's good news. Well, the professional trader is saying, okay, the top is in, I'm shorting this guy. Now, there could be all sorts of reasons for this. Perhaps the stock had run up ahead of the news. So this is a classic buy the rumor, sell the news event. Or maybe there's a piece of news inside of the report that's kind of overriding the headline news. But the actual news itself is kind of irrelevant. All I need to know as a trader is what the price action is. Okay, so it's good news, but the stock is going down. That's the clue I need to know. So in that situation, I'm shorting that stock. Okay, now this principle works in reverse as well. So let's say a piece of news comes out on a company that is bad. Okay, maybe they missed their earnings report by quite a bit. Maybe the president of the company was indicted for something, or maybe they announced that the FDA was going to, postpone the approval of something. So the news headline is bad, right? But the stock does not go down. It stays flat, or it starts to go up. Okay, again, theory of relativity in effect. That tells you the bottom is in. And so that would be a really good buying opportunity. I mean, if a stock does not go down on bad news, imagine what it will do if it has actual good news. Now, traders have all sorts of specialties. If you ask someone what they did, they say, I'm a trader. That doesn't really tell you a whole lot. I'm going to tell you something because traders tend to specialize, right? One guy's going to be a scalper, another guy's going to be a trend trader, another guy's going to be a position trader. One guy trades the Anderson pattern, one guy trades the theory of relativity, one guy trades the open and he plays the volatility at the opening bell. There's all sorts of strategies that traders can specialize in. And that, frankly, is kind of what you do want to do if you're going to be trading. You don't want to try to become a master at every aspect of trading. It won't happen. It can't happen. You'll take a lifetime experimenting with different strategies. I mean, it takes years to become proficient in any one strategy, much less multiple strategies. But having this little bit of knowledge about the theory of relativity and park that away in the back of your brain can help you in your overall trading. Okay, so as you know, if you've watched my other videos, I've explained to you that the market is never really going to be a rational place. Why? Because all markets are made up of human beings, and human beings are emotional creatures. So emotions are really what drive the market. And the three emotions that drive the markets are fear, complacency, and greed. And of those three, the more powerful emotion is fear. But if you can understand how to read the emotions inside of the chart patterns and the price action, you will have an advantage over other people, over the market. So you have to realize that the market as a whole will influence any one stock or crypto or bond or forex, that they happen to be in. Okay, there's the overriding psychology of the market that will affect your particular stock. I mean, if the market craters, if the market pukes and goes down really sharply, your stock or crypto could go down just on the gravitational pull of the sell-off of the overall market. So nothing would have changed with the fundamentals of the stock you're in from yesterday to today, but the market is selling off. So the market is taking your stock, is kind of catching it up in the net and dragging it down because of the overriding psychology of the market. And that works in both directions, right? So what I've been doing for the past week here, as the market has been selling off dramatically, is I've been watching a lot of stocks and I've been watching some cryptos to see which stocks have not been selling off that much, okay? And those are the ones that I want to be looking to buy, because when the bottom in the market is put in and it starts going up again, the stocks and the cryptos or whatever it is you're trading that went down the least, they're the ones that are going to go up the most when the sell-off in the market is over. And it makes kind of sense, right? Now, for example, if you have Bitcoin or XRP, which I'm going to show you here in a second, and the market in general has been selling off dramatically, but they have not sold off very much, that tells you that people are loyal to those positions. There's not a lot of selling going on. And so when the market does turn around, those kind of plays, the ones that did not go down very much, maybe they even went up during that market sell-off, those are the ones you want to own. Don't waste your time on the things that sold off huge in the marketplace. That's an amateur move. That's an amateur mistake. Don't make that mistake. The ones you want to buy are the ones that the street wants to own the most. Don't try to be the one guy who's smarter than everyone else, and he's going to buy this little crypto over here or this little stock over here that no one else is paying attention to, because you know better. You know the real story behind the stock. Wall Street doesn't care about your opinion. Wall Street doesn't care about what you think about any particular position. And don't argue with the market. The market is always right. If you get into a pissing contest with the markets, you're going to lose all your money. So you got to learn to be smart. You got to learn to think like a professional. So let me show you how I've been taking the theory of relativity here and applying it to my next trading ideas. Okay, so I'm recording this on Friday morning, March 14th, 2025. And the market this morning, and the market's been open for about an hour and a half, the market's up 380 points. So it's having a little bit of a bounce, but look what the market has been doing. The market has been on a steady sell-off. I won't get into the entire market commentary today because I want to respect your time, and I've been talking about this, ad nauseum in my previous videos. But the market today is going up, but the market has been coming down pretty substantially here, very substantially here over the past month. Well, let's focus on, the action of the past couple of weeks here. Look, the market had a really nasty sell-off. Well, at the same time that the market has been selling off, what has Bitcoin and XRP been doing? Now, you would think, right, that they would also have sold off dramatically with the market. Okay, so let's start by taking a look at Bitcoin. Bitcoin is up a little bit today. Okay, that's a one-day chart. Let's look at the 1 month chart. Okay, now, yes, so Bitcoin, month over month, it's had a nice little haircut. It started the month over here at 97,000, and today it's at 83,000. So that's a nice percentage-wise haircut. But I want you to look at the past 2 weeks here. Yeah, it's been bouncing around here, but it put in a pretty nice floor here at 79,000 about 2 weeks ago, and then after that, it did not go down anymore. I mean, it went up and down, but it did not break that 79,000 level. But over the past 2 weeks, the market has been going down steadily during the past 2 weeks, but Bitcoin has not. Okay, so now I'm becoming interested. The high percentage trade would be, see this little peak right up here at 94,000. That's where the high percentage trade is once it takes out 94. But I am probably not going to wait for this 94. I'm going to start nibbling back into Bitcoin right in here, around the 83,000 level. And I wouldn't want to do a nibble because I might be wrong. It might roll over, and go down more. So I don't want to go all in at this level. But I want to nibble, so I've got a nice starter position on this guy. But when it takes out this 94 level here, or really, we'll round it out. We'll call it 95. Once it takes out 95, that's where the high percentage trade is. And let's take a look at XRP. I mean, XRP is doing even better. Let's take a look at the 1 month chart. Okay, so XRP started the month at 281. At the moment, it is at 233. But again, just like Bitcoin, over the past 2 weeks, while the market has had a continual sell-off, it has not taken out the low of $2. Okay, so I guess it was for a few minutes there, it was at $2 even. Then it had an impressive rally in there, and then it came right down to this $2 again, pretty much on the dot. Yeah, on the dot, it got down to $2 again. So that round $2 level is a very solid support level for XRP. So before I started this recording, I did pick up some more XRP as my starter position, and then I'll lean into it some more when it takes out the next level, probably around the 270 area. So when you have periods where the market is a disaster, things are just selling off really sharply, and you're looking for buying, you're looking for trading opportunities, look for the stocks, the cryptos, the forexes. Look for the things that did not go down very much, because that tells you that there's loyalty among the community inside of those products that don't want to sell. Don't waste your time on the things that sold off right along with the market. Find the ones that held up in the face of the market sell. There's always something, right? And you only need one. Find something that did not participate in the sell-off. And that's the one you want to own. Because if those things are not going down when the market looks like crap, imagine what they will do when the sun actually comes out. It's going to be like a freaking rubber band. And you can use that theory of relativity at all times, okay? And it's most useful in times when the market is having a dramatic move up, in concert, or downward, in concert. When you have a big move, then it's easier to spot the really good buy candidates or the short candidates in the other direction, right? So if you got something out of this video, and if you don't mind, could you support my channel by hitting that like button and the subscribe button? Ed Anderson, live from Minnesota, signing out.
Copy that.